Designing and constructing buildings takes place over many years, with many people collaborating together. In the Brick and Wonder podcast, we have conversations with people who work together to realize a collective vision. I spoke with two people whose collaborations evolved into years of partnership. Brad Hargreaves, a serial entrepreneur whose latest company, Thesis Driven, publishes content and offers courses for people in or aspiring to be in real estate. And Paul Stanton, a real estate professional who came together with Brad in the Thesis-Driven journey. Together, Brad and Paul aim to support a new wave of interest in real estate development that they see as analogous to the wave of interest in tech spawned in the early 2000s. I'm Drew Lang, the founder of Brick and Wonder. This is the Brick and Wonder podcast. Brad, Paul, welcome to the Brick and Wonder podcast.
Thanks for having us on. Excited to be here.
So can each of you tell me briefly about your professional backgrounds and what drew you to real estate?
Yeah, so we've each had our own journeys. Mine really comes more from the technology world. I actually got my start as a game developer. So back in 2005, I started a game development studio building massively multiplayer casual online games. That doesn't really relate to the rest of the story, but it does start it off and give some context for kind of how I got where I am. That got me into the tech community here in New York, which was really budding at that time. And there wasn't a lot of people. The New York Tech Meetup was maybe 150 people who would get together once a month, almost all of us, hackers and to some degree. And then the global financial crisis hit, sunk the studio I was building. I graduated from college shortly before that. And a lot of my peers were sort of in that overeducated and underemployed category. I mean, you had people who thought they had great jobs at, white shoe law firms, investment banks, what have you lined up, and suddenly those jobs didn't exist. So on the flip side, you had all these technology companies in the New York technology community that needed talent. They needed web developers, UX designers, data scientists, digital marketers. So I and a few friends started a school called General Assembly that was focused on training in those kind of digital skills, and we built it in a trade school framework. So legally, it was a trade school, like you would have a plumbing school or an HVAC school or something like that, but we were teaching, data science and product management and things like that. And we actually, over the next 5, 6, 7 years, became the largest trade school in the U.S. About 30,000 students through our doors, campuses in 20 cities, 6 countries. And that not only had put me at a place where I was helping run a large brick and mortar organization because we had brick and mortar campuses, but also clued me into a lot of problems in the brick and mortar world. We were going around building out these, we called them urban campuses in the hottest, coolest zip codes in big gateway cities. And then we would bring in instructors, we'd bring in students, we'd bring in our employees, and they struggled to find a place to live. So that got me onto the housing side. What was originally really the student housing version of General Assembly, which was the school, was called Common. And we built apartments designed for roommates. And over the next 7 or so years, we got to a point where we're managing around 8,000 apartment units. Almost all of them innovative things. We sort of became known as the apartment designer and manager that did the stuff Greystar couldn't figure out. So shared apartments, tiny apartments, 180 square foot units, live workspaces, things like that. Sold that platform in 2022 to a big European operator. Those kind of esoteric multifamily things are a lot more common in Europe, so you have bigger players over there. And since then have been writing Thesis Driven, where, from an editorial standpoint, we write about the future of real estate. So technology, but also new concepts, what's happening in the capital markets, how are social and cultural changes influencing what we build and why we build. And one of the most exciting things that we've been doing is, working with Paul and building out an organization to offer education and training. for people in the real estate world. And we can talk more about that. But Paul, maybe share a little bit of your background.
Yeah, sure. Thanks, Brad. Thanks, Drew. Mine's a little bit more down the fairway from a real estate perspective, not right down the fairway, but it started with a girl I dated. Her dad was a real estate developer, and built cool things and made a lot of money. So I thought that would be pretty interesting profession out of college, and got into brokerage though. Got into commercial real estate brokerage here in Manhattan, and very quickly realized that's not what I wanted to be doing, running around showing space all day. So that I went to law school because law school, and it was GFC. It was 2000, end of 2008 into 2009, and went down to New Orleans for law school, and came out working for a Blackstone-backed owner-operator. We were doing mostly industrial and office. And, that was closer to what I wanted to be doing, at least like what my heart wanted to be doing in, buying and, repositioning assets. But I still found, kind of working in your traditional food groups very, very boring. The idea of just buying an office building, renovating the lobby, and putting some polish on a few spec suites and taking it back out to market was not my idea of value add. I liked things that were more operationally complex, and at the same time there were a lot of like Brad was starting Common, WeWork was becoming a thing, and when I looked at a lot of those new concepts, I didn't necessarily see them as purely operating concepts. I saw them as value add strategies for traditional asset classes. So I got into a short story that could be much longer, left the private equity real estate shop I was with, and partnered with a very wealthy real estate guy. And we started buying office buildings in the South. And we were operating them with co-working brands. But it wasn't just co-working. It was the idea of bringing a brand and amenities and, shorter terms, more flexibility, hospitality to office. And we were super bullish on that idea until COVID hit. And COVID kind of, really put a nail in the office industry and, kind of the flexible space / co-working industry. But because I had built, a pretty good network of more of these innovative operators, started an investment bank off of that, which, I was leaning into understanding the operational complexity, marrying that with real estate strategies. So started an investment bank that focused on raising capital for more innovative concepts. We do some M&A for like real estate technology companies, but most of our focus is raising capital for new and more innovative themes. And, that's kind of where Brad and I came together. Brad was, writing about and surfacing all of these concepts. I was trying to capitalize some of them. And, we just found that there was this ecosystem of, innovators in the real estate space right now who are, all trying to grow, trying to find resources, trying to find the education, some of what, kind of existed for the tech ecosystem in the early 2000s. Debt didn't really exist in real estate, but there's all of this innovation that's been happening. So it's been a very fun time to look at this, from a capital market seat, but also, from a thesis driven seat, and be thinking about, how are we bringing these concepts to light.
Thanks for that, guys. Tell me what Thesis Driven is, why you started it, what problem or problems you're trying to solve.
Yeah, so I can answer that on a couple of levels. And the most succinct way I've found to describe what Thesis Driven is actually to borrow from another writer, Dan Schipper, who used the term multimodal media company. And I think that describes what we're doing at Thesis Driven well, in that it is a media company at its core that is the base. But then there are other things sprouting off from that may be media or maybe something very, very different. But the content that we're producing, the stories that we're telling are related to a lot of the other products that we're coming out with and the things we're doing. And we're finding things as a media company, opportunities, needs, and then building for that. And there's a related theme there that has to do with AI and evolutions in technology, that if you believe that the cost of software is asymptotically going to zero or close to zero due to AI, improvements in automation, et cetera, you ask, well, where is the right place for software and data products to live? And it's within a media company, because you have brand, you have distribution, you have all the things that's where value exists, is in the brand and distribution. So We are at the core a media company. We write stories about innovation and the future of the built world. And we look at that through a couple different lenses. There's obviously technological innovation, where a lot of people are very focused on technological innovation. And there's interesting stories there for sure. But we also want to look at a couple other pillars to it as well. There's financial innovation, which are, the capital markets on the real estate side are changing very fast. I mean, Paul knows more about that than I do. And in fact, we met because Paul was a guest writer that was writing some of the most compelling stories in Thesis Driven about new types of investment models, how real estate deals are getting capitalized. How do you fund an innovative concept? So there's financial innovation. There's a lot of exciting things happening there. And there's also social and cultural change. Preferences are changing. How we think about the built world is changing. And we look at that as just as an important trend as anything happening on the tech or financial side. So we try to cover all three of those aspects as a publication, and we go deep. And so our average story length is around 2,500 words. So we want to spend real time and meaningfully cover things.
When you talk about funding innovative concepts, right, and empowering innovative concepts in real estate, what kind of things are we talking about?
Yeah, I mean, a lot of funding for innovation typically goes to tech, right? In any industry, when you're talking about innovation, it typically means, technology and funding technology, and typically that comes from VCs. And so, interestingly, in the real estate world, a lot of the innovation that's been happening over the past decade or so has not necessarily been in software, but it's been in innovative operating concepts and new models. And, some of those are tech enabled, where these operating companies like a co-living company are leveraging tech and sometimes building their own tech. But there's also an operational component to those things. You sometimes need to, build out space, and you need to hire people every time you open a new location. Software, scales very efficiently. Operating companies don't. So I think what we saw over the past decade or so is a ton of venture capital poured into some of these more innovative operating concepts in real estate, where it probably shouldn't have been, because these concepts just don't scale fast enough to meet kind of the return demands of venture. So that kind of has left a gap in the market, because traditional real estate capital markets are very conservative. You kind of go from, the different ranges are a core investment, core plus, value add, opportunistic. And opportunistic is like a development project, right? You have to go ground up. And so, and then there's VC that was funding these new operating models, but there was really no gap between venture capital and opportunistic investing. And I think that's where a lot of players have started to step in, which is leaning into, how do we fund an operating concept alongside funding, the real assets, and marry those two things together, but get upside for being early and investing in, an operating concept and investing in a physical asset that's maybe designed differently. So in a co-living asset, oftentimes, depending on how you define co-living, maybe you need larger common areas and smaller bedrooms, and that requires real capital expenditure. And that's a different form, and if, God forbid, that concept doesn't work out, you may have to knock down all the walls and rebuild that floor to traditional multifamily, which, is going to eat into your return significantly. So it's viewed as something that's, more aggressive than opportunistic real estate, but it's not kind of like, hope 1 in 10 hit like venture is focused on. So that's kind of the world of, capitalization around real estate that we've really been focused on, is how do you fund these new structures, and how do you, create enough incentives for the investors that are doing it. And a lot of folks that have been doing, we've seen a lot of family offices moving into the space that have more flexibility, but there's more and more, institutional investors that are emerging to kind of, fund these new platforms, these new models, which is pretty fascinating if you like the real estate capital markets.
And so what are some examples of innovative concepts and innovative teams? Like, what do these things look like?
Yeah, totally. So, I mean, one thing that we've been spending a little bit of time on recently are surf parks. And I didn't even know what a surf park was until Paul told me about it about a year ago. So the problem with surfing is it's actually really hard to get into surfing. It's a great sport, but, every surfer has their own little piece of beach. You have to, it is this learning curve of getting into surfing. And just the number of surf spots is limited. But advances in technology have led to the ability to create controlled inland wave pools. So you basically create a big pool of water and you have a thing in the middle that makes waves and you can surf those waves. And that totally democratizes the sport of surfing in really interesting ways. Now, let's say you are an entrepreneur, a creative, and you've developed this surf park concept. How do you get it funded? Like, you don't want to go to VCs. It's not really a technology concept necessarily. There are surf park tech companies, but they're not the ones building the brick and mortar assets, typically, like creating a giant pond and putting a wave generator in the middle of it. But you go to a typical real estate investor who's used to buying stabilized apartment buildings in Dallas, and they'll look at you like you have a third eye. Like you say, yeah, you want to build a giant hole in the ground and like so surfers can come and surf in Texas or Chicago or wherever. So there's a need for a type of capital, a type of investor that kind of fits between all of this, is willing to take a little bit more risk than, or quite a bit more risk than your typical real estate investor, but doesn't have the, 100x return expectations of VC. So it's higher return, but a little bit less risk than your venture ecosystem. And, if you're a creative out there in the real estate world and, you're sick of building the same apartment building over and over again, you should be very interested in what's happening in the capital markets right now and how do we fund really innovative things. One last anecdote I have. When we were early in Common, obviously it's what got me into this concept. Going around talking to owners about like, hey, you should build 5-bedroom apartments because, this is actually works really well. And if you design them in this way, it's a great experience for the people who live in those. And I sat down with a real estate developer once after getting rejected n number of times from developers, owners, investors building this. And he looked at me and he said, Brad, I don't build what the customer wants. I build what the bank wants. And that's how a lot of developers think.
Before we talk about why that is, what is your take on that response? And, and I get the impression that in some sense you're solving for that take. You're solving for that constraint, that problem, and you're looking to empower other people with different ideas, creative ideas. Maybe you're looking to empower teams and even bring different people together with different skill sets in order to help, enable a surf park or enable something that's a little bit out there.
Yeah, so we could talk about some of the connectivity, but I try to avoid value judgment with this kind of thing. I mean, we need cheap, well-financed multifamily as well. I mean, we have a housing crisis in the country, and we need that product too. And it's partly that banks are willing to lend Fannie and Freddie money that to get that built, that can be built. But it makes it very hard to go outside of, straight down the fairway when it's either got to fit into a very narrow box that a lender has or it can't get financed and it's not going to get built. So I think a lot of what we're trying to do is gather education, so make people get people to understand what's going on out there, and how do you do some of the basic things as well. But it's also getting together people who think differently about real estate. Ideally, an increasing number of investors out there that think differently about things, and some of that is because they genuinely want to, and some of that is because dynamics in the market today have made them hungry for yields and finding yields wherever they can. And so you're seeing more and more people think creatively about these off the beaten path types of real estate, which is an exciting time right now.
So what role do you think design and creativity can play in the advancement of real estate? Not just generating yield or not necessarily upending the models that exist out there, but, empowering ideas in real estate.
Yeah, so, the ideas can come from a number of directions. And there's sort of no right way or wrong way to do that, so to speak. So you have like a lot of the innovation in, multifamily is truly originating on the design side. So you look at folks doing micro apartment developments, for instance, and thinking about how do we really create affordability and some yield uplift by designing units in ways that are very thoughtful and livable, but that happens in 250 square feet. So that is innovation coming, I would say, truly from the design and architecture side. Like, it's very hard to innovate in that unless you are an interior architect, interior designer. Then you have other innovations that are coming from the technology side. So there's some of the surf park stuff is true. Like, hey, there is technology that exists today to produce really high quality, reliable, frequent waves in a inland environment, in a pond, basically. That's technological innovation that has now unlocked this opportunity.
And I think there's a big design component to that too. I mean, the reason these wave parks have existed for a long time, one, now they churn out waves fast enough that they're profitable, but two, they're beautiful. And they weren't beautiful 10 years ago. And you can design them around a beach, and you can design, a mixed use environment. So, I think design will continuously play the role that it's always played, which is, massaging the experience and enhancing the experience, especially as we're dealing with, newer asset classes, like Brad was saying, solving problems with design, whether that's designing smaller spaces or whether that's designing, new ways of incorporating a wave into a mixed use community, whatever that is. There's a lot of design innovation there. I'd say ultimately, at the end of the day, it all comes down to a math problem. I always tend to think of things through the lens of the capital markets and can this get financed, right? Like, it can be the most beautiful, coolest thing in the world, but, is it going to pencil at the end of the day? So I think a lot of the other advancements in, design technologies around, using prefab and, new materials, which may have looked clunky and not beautiful 5 years ago, you're starting to see better and better prefab projects emerge. And so I think that's a big opportunity for design in the future, especially in, larger home building and, smaller multifamily projects, being able to shorten construction cycles, limit some of the downside, and, especially, around tariff concerns. If you have more reliable sources of panelized construction, that's always going to be a plus.
Yeah. Are you seeing anything particularly interesting in manufacturing that you or your community is looking at?
There's one group that we know pretty well. I don't know if you've come across these guys. Have you heard of Ori Living?
Sounds familiar, but tell me about them.
So Ori's a group out of MIT. They've basically re-envisioned the old school Murphy bed. So it's all movable furniture. They're able to take, essentially what, would be, a 300 square foot studio that would be probably a miserable living experience, at least for most Americans, and able to turn that into something that's far more spacious because, with the click of a button, the bed folds out of the wall and the desk turns into a table and, the couch lifts up and, suddenly it's a, it's a remote background, or it's a background for, your remote work. So they've really done an unbelievable job. I mean, it's engineering more than anything else, but, designing movable furniture that's designed around, these studio and one bedroom and even some 2-bedroom products, moving bookshelves that turn into closets that, fold out into, workable kitchens. It's pretty fascinating what they've done. And kind of the next phase for them is really incorporating that with the right developers who can, take these technologies and then utilize them thoughtfully in their projects, which I think is kind of in progress currently.
Yeah, I think there are interesting things happening in the true kind of manufactured housing space as well. I mean, there's been a lot of stopping and starting. Obviously, it's been a bit of a graveyard for venture dollars, but it does feel like we're getting close to the point where there are true savings and efficiencies with some of these techniques. I think one I'm interested in is on-site manufacturing, so mobile microfactories. So like what QB is doing, for instance. A company out in New Jersey that does these mobile factories, primarily works for single family home developments, build to rent, things like that. But you are seeing have some folks get to a point where like, hey, it is certainly faster to do it this way. And depending on how you look at it, may save money too. And so you're getting more developers looking seriously at it. I think the biggest thing I'm excited about in the large developer side is Greystar. The largest multifamily developer in the U.S. just bought a factory in Pennsylvania to do their own manufacturing of modular components. And, Greystar is the kind of firm, I mean, they're not investor owned, they're owned by one person, and they manage about 950,000 apartment units in the United States. So they're the kind of group that if they do get behind it and could put real capital behind it, could will it into being. And so I think you are going to see movement in that space finally over the next 3 to 4 years.
As part of your platform, I see you're teaching courses. Tell me about those courses and what you're trying to get at. Who is your audience? What are you teaching? What kind of feedback are you hearing from your students?
So it started about, 18 months ago. Paul, who was one of our guest writers, writing about a lot of capital markets things in Thesis Driven, came to me and said, "Brad, you should really teach courses out of this too. I mean, you're doing these deep dives already, and there's a few real needs for learning here." And one of the first ones we identified was that there's a lot of vendors in the space, prop tech companies, but not just prop tech companies. I mean, anyone serving the real estate industry, they don't really understand the real estate business, like how money flows through like the GPLP structure, waterfalls, like all these concepts that if you're a real estate developer are critical. But if you are a product manager at a real estate, services company or a tech company, you don't necessarily know how any of this stuff works. So you end up speaking a different language than your customer, and that's a problem. And so we started our first course called Fundamentals of Commercial Real Estate, which is 2 weeks. It's online. We do it online, in person, mostly online at this point. And it's 2 weeks of really real estate finance 101. So how real estate, the building P&L, look at unlevered yields, then we look at capitalization stack, waterfall, IRR, things like that. And then we move into talking about operations. So what are the roles, like days in the lives of people who work at a real estate building? What does a property manager do? What does an asset manager do? What does the leasing agent do? And how are they incentivized? And what might they be excited to buy or do? And what might turn them off? So a 5-week online program. So that was our first one. Then we launched our second last summer, which is Fundamentals of Capital Raising, which is targeting somewhat of a different audience. It's not venture capital raising. It's actually real estate capital raising, where there's plenty of things that teach venture capital raising out there, but relatively few that talk to emerging developers and sponsors and say, how do you actually craft your sponsor profile, your deal profile in a way that's going to appeal to all these investors? And oh, by the way, here are all the different types of investors, from private equity firms, high net worth individuals, family offices, hedge funds that you can hypothetically raise from. Here's all the deal structures you can embrace. Here's kind of which investors like which deal structures, how to put it together. And then how do you actually get in front of those investors? One kind of macro thing that I've always been very interested in is, feels like the tech industry and venture has professionalized pretty dramatically over the past 20 years since I raised my first round of venture in 2005. I mean, you have this whole ecosystem of incubators, accelerators, all VCs will tell you on their website what they do and what they invest in and who they are, and you can email them. Real estate doesn't have any of that. It's still very obscure. It's hard to understand who's doing what. The investors don't make themselves known. There's no accelerator programs if you want to get started. It's very much the Wild West. And so I do think some of that structure that has been built for tech is coming to real estate. And we hope to be a part of that.
That's interesting. It's the first time I've heard this notion. So you think there's a need and a place for an incubation space, if you will, in the world of real estate for young people in particular, as a point of entry?
Yeah, I mean, I think it's the toolkits. There's, if you break apart, as Brad was saying, there were, incubators, accelerators. There's, a million different meetups. I mean, I know you all have a community that brings people together. Job boards, databases, being able to access, investors or developers, and understand them by asset class. Like, it's just shocking how disorganized this entire ecosystem is. But, I think we both align on the fact that it really all starts with education. And even the education around real estate is, as Brad said, obscure and opaque. It's really hard to understand these concepts. It's hard to understand, both keep up with current events, but also just like the tried and true path to how to raise capital in real estate. I mean, to our capital raising course, not to go back down that rabbit hole, but, one thing that we saw is, everyone in real estate goes down the same path. They raise from friends and family, they tap out that network, and then they scratch their head and say, all right, now how do I grow my platform? So really, a lot of times scale stops at, how large your network of country club money is. And if you don't understand how to, scale a platform from day one, it's really hard to be thoughtful about, what you're building over a 10 or 20 year period. So, the fact that none of that education exists, and the fact that none of these databases exist, and the fact that other resources like incubators and accelerators, we're starting to see them emerge. But, that's what I think we get most excited about, is there's just so much white space here, and there's so much opportunity to help everyone that's trying to innovate and get started in this industry. And for years, it's just been going down a dark tunnel with, no flashlight by yourself. And a community aspect, of course, to everything we're doing too, being able to go on this journey with other people, geographically proximate, but also working in similar asset classes. We think that's really exciting too.
I'll also make one societal point, which is I think we need 10 times as many real estate developers as we have today.
I would agree with that. And we need different types of people entering real estate. And I'll just tell you, we regularly have people in the brick and mortar community coming forward and asking us, how do I raise capital for this project that I'm putting together? Right? Who can you introduce me to? Right? So beyond getting to that introduction that everybody is looking for, beyond their friends and family, what are you telling people? How are you guiding people in their capital raising journeys?
Yeah, a lot of it is, first, you really can't go raise capital until you understand yourself how the capital markets work and what your, kind of the narrative that needs to be put together. Again, going back to the opacity of the capital markets, you really need to start with understanding, what does an institutional quality sponsor look like, someone that's raising money for deals? What in the future are, more institutional capital providers going to be looking for, and then work backwards from that. So first, it's really on the sponsors to understand the metrics that they need to be focused on. And then as far as, raising capital is concerned, you can't get around the fact that real estate is a very capital intensive industry, and you have to raise a lot of money. And so having a friends and family network or a country club network, so to speak, is always a good place to start. But there's just so much access. We have so much digital infrastructure now in the form of LinkedIn is just one example of, different ways of leveraging content, leveraging media. And, we're getting into a little bit of that ourselves, creating more of a platform for these people to have their voices heard and have their projects seen. But it's really thinking creatively and looking at the tools that exist to connect with, people that are not your, friends and family network. And there's, trillions of dollars in retail capital out there. It's just a function of reaching it.
It's certainly like once you get past retail capital, there's a certain coding, there's a certain way you have to talk, terminology you have to use. Certain types of investors like to hear certain things more than other investors. So if you're talking to a real estate private equity investor, they're going to care about downside protection and like the day two scenario of like, what happens if this specific strategy doesn't work? Here's 3 other things I've thought about you can do with this asset. Whereas if you're talking to a high net worth individual, that's not going to resonate in the same way. That's not how they think. So just understanding like, okay, let's match my message and my sponsor and deal profile to the specific type of investor I'm going after, that's key. So understanding those nuances and how to position yourself and your firm, your development shop, even if it's just you, shouldn't look like it's just you. That's a lot of what we're teaching, is have those techniques, that coding, so to speak.
Can we back up a second, just
Sure.
in terms of elucidating things for people? Many people in our audience don't have this terminology that you're talking about down pat, right? So when you talk about retail capital, what do you mean? What is that? And the term sponsor is another one that's thrown around. Let's define those two things.
Yeah, no. So sponsor is really anyone that's raising capital. And that can be oftentimes interchangeable with a GP, the general partner, because the general partner is the one raising the capital. But that can be a general partner of an operator that's raising capital for a deal, or it can be a general partner of a fund that's raising capital, or who's the sponsor, who's raising capital for, a fund structure. And, from a number of different LPs. And, all of these things get interchangeable. So, it's really hard to even just map out on a piece of paper. But, and a GP can also be a developer, right? The developer is often the GP of the project, the one putting the project together. So developer, GP, and sponsor are often kind of used together as similar parlance. Retail capital versus institutional capital is much easier to explain. Retail capital is basically individual capital. So if you took a check from me, from Brad, from yourself, that would be retail capital. Whereas institutional capital is money coming from large institutions. So that's typically pension funds, endowments, university endowments, large insurance companies, and sovereign wealth funds. Like Norges is the sovereign wealth fund of Norway. Audio is the sovereign wealth fund of Abu Dhabi. So these are huge check writers. These are people that actually a lot of their money oftentimes comes from, lots of retail capital kind of bundled up and then being deployed into real estate as, kind of a conservative bet, so to speak, or into these funds. So, if you're taking money from institutional capital, it means you're tapping into either directly from these sovereign wealth funds or you're, taking money from private equity real estate funds who raise money from these big institutions. That's all kind of called institutional capital. It's the professional investing environment of real estate. So, you're not just going to a bunch of individuals asking for a $50,000 or $100,000 check. You're going to folks who are highly sophisticated and highly trained in, underwriting and assessing real estate deals. So for those folks, it's actually way more formulaic as to how you speak their language and, the story that you need to tell them, because they're all kind of looking for the same thing, as in, versus retail capital, as Brad was saying, it's a little bit more nuanced and it's, a little bit more emotional, and, they might invest in something that's maybe not the best financial return, but maybe they just want to be invested in some super cool hotel in this cool burgeoning town of Idaho or something like that.
So other than education, just knowledge, a knowledge base, and access to capital, what are some of the other meaningful barriers to entry? Or another way of asking that same question is, how do we draw more people into real estate development? Because I'm with you. We need more people. We need more ideas. We need more building.
Right. Well, I could talk about policy and policy barriers we could drop as well, because I do think you look back to the first half of the 20th century, you didn't really have this distinction between builders and developers. If you were a general contractor, you also just went and built things, and it wasn't that complicated. It was easy to get permission to build something, and relatively straightforward how that whole process works. Now, we've added a lot of regulation on top of that, some of it good and very well-meaning, but there's a lot. And now if you want to make that leap from being a general contractor or being an architect to also doing your own deals, there's just a lot to navigate around the permitting process. It's not just raising, okay, here's the capital to build the project. It's also, there's a lot of risk capital just to lock up a site, to diligence it, to entitle it. Like that could easily run hundreds of thousands of dollars for even a mid-scale, multifamily project or something like that. So I do think there are real policy barriers to getting people into real estate development, and the unintended consequence of that has been concentration of power and capital in a handful of very large firms that have the lawyers, they have the on-site staff, they have the wherewithal, they have the risk capital to go and do those deals. It's why it seems like every time New York City decides they want to build a new big project that has some affordable housing component, it goes to Related. Because Related, even though they have a terrible reputation, we're dealing with this in Chelsea right now where I live, they handed the deal to Related. Related has a terrible reputation with public housing redevelopment. And now the community is pushing back, even though it would add thousands of new affordable housing units to Chelsea, something our neighborhood badly needs. I know I'm going on a bit of a tangent right now, but I think this is indicative of how well-meaning regulations, which for a big, complex city affordable housing project, really only related can figure out how to deal with, has then concentrated power, capital, and wherewithal in a relatively small number of firms. And so if we can do a little bit of democratization, and we're doing what we can on the capital markets side, on the education side, I think it's a good thing for society.
On the capital market side, how do you think about debt, right? How are you talking to people about debt? How are you helping people navigate the debt markets? Are you seeing the private debt markets opening up in some interesting ways?
At Thesis Driven, we don't spend too much time on debt. I mean, we do help folks understand the different types of debt, but raising debt is more of a straightforward process. I mean, raising equity, there's really art and science to it. Raising debt is just more science. Like you either have an asset that a lender is willing to fund or not. But, to your question on private lending and, private debt, I think, especially with interest rates where they are and, a lot of real estate capital that's available has moved into looking at new and creative debt structures, primarily through like mezz lending and preferred equity, which, mezz and pref, can look kind of the same or like, closely related cousins in a lot of ways. But that's where a lot of the private lenders have started to move toward, because if they can get a 15% return and be more senior in the capital stack, i.e. not be the equity, and get paid out earlier and still make 15%, why wouldn't they do that if equity is offering them maybe 18 or 19%. So it's become a safer bet for a lot of, private investors. You're seeing more and more family offices getting into lending.
Do you help people with relationships, right? I mean, you made reference to relationships and, finding the sources. Is that something that y'all are interested in?
Yeah. I mean, I think we have been more focused on the capital markets side and, how do we get more information out there more in an educational way? As I think I mentioned at one point in my intro, I do also run an investment banking boutique that raises equity capital for real estate deals, typically things that are more innovative and niche. But that is a very old school process, so to speak. The equity broker that puts, marketing materials out and goes and blasts them to, 50 groups that they think are, high likelihood targets for something like that you have relationships with. But I think what we've been more focused on is really democratizing that access and educating the investor community on all the cool things that are happening within our little ecosystem. And we've started doing pitch nights, which are similar to what you see in the tech world, where we have folks from our courses who get to pitch over, live over a webinar, an hour and a half session where, we get a few hundred investors show up for those. And so, that's one way that we're making introductions in the ecosystem. And I think people from our courses have been partnering on projects together and meeting each other. I think, again, the need for community is there. So it's been happening kind of organically.
We also did launch about a month ago a new email list, which is basically we saw enough demand from investors out there that we said, well, we need to make a email list specific to investors, accredited investors. We haven't sent it out far and wide because you have to be an accredited investor, which I think that the bar is pretty low. It's there's a net worth criteria, there's an income qualification. But as we saw that there's demand from that group to learn about these innovative concepts. So we just started that last month, just solely focused on investors. So we are looking to build relationships and get more into that from a democratization standpoint. We don't want to build just like another bank, but I do think there's an opportunity.
And what types of people are you looking to come together with? Any types of people in particular?
I mean, thesis driven writ large. I mean, we cast a pretty broad brush around anyone who thinks innovatively about real estate. In practice, a lot of what we do end up talking about is the capital markets and what's happening with investment. So, and everything is kind of grounded in that financeability. How would an investor look at this? How does this actually get funded and built in the real world?
It seems like you're more grassroots oriented. You're ultimately oriented towards action, right?
What can get
empowering
built?
people to build, to come together and build and, become resourced, knowledgeable and so forth. What are some of the things that are next for Thesis Driven? What are some of the things that y'all are looking to roll out in the months ahead?
Yeah, so we just just launched our 5th course product, which is on underwriting. So we're getting even wonkier. And this one we had to bring in our first one to bring in an outside instructor because neither Paul or I should teach an underwriting course. But we really saw a lot of demand from people who are getting into real estate development. Like, okay, I need to build a financial model and really underwrite this asset. How do I do that? Because I don't have any formal training. I never spent 2 years at Blackstone looking at deals. So we brought in someone with a ton of underwriting experience and built out a course. And we're running our first kind of pilot session of it right now. And we're going to be doing another one this summer.
You mentioned pitch nights that you organize.
Yes.
Do you have a schedule of those that you publish, or is that something that we can announce out to the Brick and Wonder community?
Yeah, no, would love to get any folks. That's also, by the way, targeted specifically for accredited investors because people are talking about deals. I mean, we're careful not to kind of trigger any SEC issues in that we're not pitching specific metrics or things like that, but we are educating investors on live projects that they could potentially invest in. So yeah, we're happy to share in the call notes or whatever's helpful. The next pitch night, I think it's June 25th, but we need to look at the calendar.
I mean, another question on your pitch nights: are you pre-vetting the deals?
I would say yes, and that we do talk to the sponsor, we do know the sponsor. We're not representing that they have the entitlements they say they have. So I do want to draw a little bit of a line there on what we're representing.
Right, you're just looking at an overview of the deal and just making sure this is something that our audience of investors are going to find interesting.
Yeah, do we think this is compelling? Do we think the sponsor is credible versus we're not diligencing it?
Look, I love what y'all are doing. Really look forward to following you as you go on your journey, and very excited to introduce you to the Brick and Wonder community. Is there anything else you want to tell us about Thesis Driven, or just any other thoughts in general about the real estate industry before we close out?
No, I think we hit all the high points. I think from what you said, you're building a really incredible community that needs to happen, and I'm a big fan of communities. So
thanks so much, guys. Really appreciate it.
Awesome. Thanks, Joe.
That was Brad Hargreaves, a serial entrepreneur whose latest company, Thesis Driven, publishes content and offers courses for people in or aspiring to be in real estate. And Paul Stanton, a real estate professional who came together with Brad in the Thesis Driven journey. Brad and Paul say the world needs 10 times the number of real estate developers that are currently active, and they are hard at work making real estate development more accessible. Thanks so much for joining us. If this episode resonated with you, the best way to support the show is to share it with a friend or colleague, someone you think would appreciate this conversation as much as you do. And if you haven't already, please take a moment to rate and review Working Together on Apple Podcasts or Spotify. It really helps new listeners find the show, and it means a lot to us. Thanks for being part of the conversation, and until next time, keep building, keep questioning, and keep working together. This episode was produced by the team at Radio Kismet, including Christopher Plant and Justin Berger. The production and editing staff also included Brick and Wonder team members Ed Thompson, Carrie Potter, Roya Osuli, and Amanda LaFontaine. I'm Drew Lang, and you've been listening to the Brick and Wonder podcast.